Welcome to Business with Louis, the show where we break down complex financial concepts into actionable insights that can transform your business and career. I'm your host, Louis Riskweiser, and today we're going to tackle one of the most significant economic events in recent history, the 2008 financial crisis explained. The 2008 financial crisis was a global economic downturn that occurred when a housing market bubble burst in the United States, leading to a massive collapse in the financial markets. This event had far-reaching consequences, affecting not just the U.S. economy, but also economies worldwide. At its core, the crisis was about risk management and the interconnectedness of global financial systems. It began with subprime lending, where banks extended large amounts of credit to borrowers who couldn't afford the mortgages. These risky loans were then packaged into securities and sold to investors around the world. When the housing market began to decline, the value of these securities plummeted, causing a liquidity crisis that froze credit markets. One of the key principles that underlie the 2008 financial crisis is the concept of systemic risk. This refers to the possibility that an event can trigger a collapse of the entire financial system. In this case, the failure of Lehman Brothers, a major investment bank, sent shockwaves through the global economy, highlighting the interconnectedness of financial institutions and the potential for contagion. Influential thinkers like economist Hyman Minsky have long warned about the dangers of speculative bubbles and the instability they can create in the financial system. Minsky's financial instability hypothesis suggests that periods of economic prosperity can lead to increased speculation, which eventually results in a crisis. This theory is particularly relevant when examining the lead-up to the 2008 financial crisis. The bank's demise was largely due to its heavy investment in subprime mortgage securities, which became worthless when the housing market collapsed. Another example is the case of Bear Stearns, another investment bank that was sold to J.P. Morgan Chase in 2008 after it faced financial difficulties. The sale was facilitated by a $29 billion loan from the Federal Reserve, highlighting the government's role in preventing the complete collapse of the financial system. So, how can you apply the lessons from the 2008 financial crisis to your own business or career? First, it's crucial to understand the importance of managing debt wisely and maintaining a sustainable financial model. For entrepreneurs, this means ensuring that your business has a solid foundation with manageable debt levels and a clear path to profitability. It also highlights the need for regulatory compliance and ethical business practices. In today's environment, where fintech and digital banking are increasingly prevalent, understanding how financial markets work and being cautious of overly complex financial products is more important than ever. Furthermore, the crisis underscores the importance of diversification in investment portfolios. Investors who had diversified their assets across different classes, such as stocks, bonds, and commodities, were better equipped to weather the storm than those who had concentrated their investments in a single asset class. In addition, the 2008 financial crisis demonstrates the value of having a robust risk management framework in place. This includes stress testing your business or investment portfolio against potential scenarios, identifying areas of vulnerability, and developing strategies to mitigate these risks. To navigate future market challenges with greater confidence, it's essential to stay informed about economic trends and developments. This includes following reputable financial news sources, attending seminars and workshops, and seeking advice from experienced professionals. In conclusion, the 2008 financial crisis was a watershed moment in economic history that teaches us valuable lessons about risk management, regulatory oversight, and the interconnectedness of global financial systems. By grasping these concepts and applying them to your business ventures or investment decisions, you can make more informed choices and build a stronger foundation for success. Remember, every great business starts with a deep understanding of the financial landscape and a willingness to learn from history. As we move forward in today's complex and interconnected world, it's more important than ever to apply these lessons and stay vigilant in the face of potential risks and challenges. That's it for today's Business with Louis. Be sure to like, share, and subscribe. And remember, every great business starts with action. Make your next move count.